Hello friends, welcome to the Financial Talk. Today's video is going to be a little bit different because I will be sharing with you an IG live that I have with Funancialism. I will leave his YouTube channel here so you can go check out his page. He talks about investing, building wealth, and especially if you're from the States, he will be a great resource. So I had this IG live with him to talk about our building wealth journey as immigrants and how did we get it started. It's a really nice conversation that we had. So if you want to know about it, keep watching the video. It's long, so you are warned, but it is really insightful and has a lot of information if you want to get started into investing, if you want to start building wealth. And the reason why I have this background is because I am from Ecuador. I am an immigrant. I came to Canada when I was 18 to study here, and my goal is to be a citizen. And as usual, do not forget to subscribe, like this video, and follow me at The Financial Talk on Instagram. We're close to 2,000, so go follow.
Hello, Dorothy. How are you?
What's up, Natalie? This is so cool. We're here. We're here to talk about our stories and hopefully spread this message and get other people investing earlier than they would have without watching this.
For sure, for sure. Super excited about this because it's investing related, and I feel that women are at disadvantage. But hopefully, we encourage some people to start investing and start taking care of their finances.
Right, exactly. And I think your story is particularly motivational. Like, I migrated here as a baby, so my mom did all of the work. I don't remember her struggle. So all of that was just like, I'm 9 months old, I'm not suffering. I don't know what poverty is, even though I've lived through it, welfare checks, food stamps, all of that. But you migrated from Ecuador to where? Canada.
Yeah.
Can you please tell me and tell everyone that story? Because what I found amazing about it, not only did you migrate at such a young age, but you also got into building wealth. And people who live there aren't even doing that.
Yes, yes, that's right. It's a long story. So just to summarize it, I came to Canada. At the beginning, it was really unknown because if I don't know if you know, UBC is a university in Vancouver. I got accepted for the university and I got a scholarship. So it was like a 15,000 scholarship tuition. UBC is usually around 30,000, and then residence is 15,000. So I do not come from a wealthy family. Not poor family either, but like middle class. So I was raised by a single mom, and my mom was just like, I'm sorry, Natalie, but I cannot afford to pay your studies. Hello, there's someone from Quito, that's the Ecuador's capital. so
Hey.
um, so I kind of gave up, but somehow God, the universe, worked things around, and I could go to Canada. I live with an Ecuadorian family, and they were like my blessing. And yes, I started going to university, and I had no idea about finances. Like, I moved to a completely different country at 18 years old. I was not taught about finance at school, and I was in a new country. Like, okay, like, what is a checking account? Like, I need to go to the bank and get a checking account and a credit card. Like, what are these stuff? Like, I just went, got it, did whatever the bank person told me, and then I had to get my first job and so on. So it was just challenging because, one, the language, I did not understand the system that much, but little by little start educating myself, reading a lot on the internet. The internet's your best resource. YouTube, use it for something useful, right? You can check everything that you need to know on YouTube, internet. And then I was like, when I was in Ecuador, I really wanted to start investing, but there are not like many opportunities or brokers, or the access to it is a little bit more complicated.
Hmm.
So when I came here, banks have platforms, there are brokers. So I was like, I want to start investing. So I just started putting some money on robo advisors. I didn't even know how they work or anything like that. I was just putting aside like $50 and stuff. it grew a little bit. I would say like 10%. But guess what? I started investing without having an emergency fund. So emergencies came my way and I had to withdraw money. And yeah, it was just like all this. And I wish if someone would have taught me like the steps on, how to start investing, how to pay off debt and stuff, it would have been better. But the life circumstances taught me
Right.
about finance. And now I'm here. Like, I want to teach people through my story how to put yourself out there, learn all this finance terminology that might seem complicated, but it's not, and build wealth, generational wealth. Because I am the first in my family to graduate from a university abroad
Mm.
and start investing, and yeah, get a job, well, from my cousins and all that. And yeah, so I want to help people do that as well.
Wow, that is a lot because you being the first, I'm not the first, I'm the second. I'm the second in my family because my mom was the first. She was like you who came here with nothing. And even though I wasn't born here or anything, I fit in pretty well. You can't kind of tell. So I can assimilate very easily and quickly, and no one even like questions, oh, you're from Ukraine, oh, you're from Russia, oh, you grew up on welfare and all that, because my mom got here and she was like, you know what makes money? Let me find in a newspaper. I see computer programmers. How do you turn on a computer? And then 5 years later, she was a computer programmer making computer programming money. Now she transitioned to reselling clothes or designer brands that she loves and travels the world. Well, she used to travel the world and buy up whatever she wants and make profit off of it. So now she doesn't know it, but she's retired and she's financially independent. But don't tell her, or else she'll slow down. But she never knew. She had no idea about stocks. She knew it as a concept. She always listened to Susie Orman, but she didn't
Yeah.
really get onto that. And Susie Orman, for anyone who hasn't heard of her, is one of the original like investing gurus from about 15 years ago who started really like focusing on women and money back when that was almost taboo and women weren't in charge of finances. At least it appeared that way, but things really changed since then. So let's talk about like our investing journeys and paths. What strategies are you using for long-term growth? You said you were going to build generational wealth. How?
Yeah, so well, the first thing is I am getting out of debt. So to finish, so I didn't get a student loan for my whole um, university major. So I had to get it for the last year. It was just like last minute decision. So I'm currently paying that off. But there's people that say like, oh, you cannot pay off and invest. I don't think that's true. If you do the math, you can do it as long as it's not like high interest, like a credit card debt, right? That has like 20% interest, right? My
Agreed.
interest debt is about like 8%. So I think that I can manage, like I know I can manage to invest and pay off my debt, and I have a plan for that, right? Like
Mm,
priority is to pay off debt, and then there's another other amounts are going towards investing. So to build generational wealth, first, put my finances in order. Everything is in order. I'm paying off debt and I'm starting investing. So for my investing, I am basically trying to do two things. So the first thing is investing long term. I do not believe on short term. I think it's really risky, and I do not have that level of comfort of doing that. And yeah, so long term investing is what I do. I am buying ETFs, which for people that are not familiar with it, are exchange traded funds. So they track, they can track the S&P 500. So I have one that tracks S&P 500, and I have another one that tracks the TSX, which is the Toronto Stock Exchange in Canada, and one that tracks real estate. So trying to diversify the portfolio a little bit. And I also invest in stocks. So stocks that pay dividends, because I am trying to do a 50-50 kind of exactly dividends. So trying to build that passive income, not worry much about the stock itself, but the dividends that they are paying.
mm,
And I am also putting myself more in individual stock picking for long term, right? Not short term. And besides that, as I said, I invest in ETFs as well. So there are some that I'm picking myself, but I also have another account where there are managed ETFs, not really a robo advisor because they are managed by people. But that is more towards bonds ETFs because I'm not familiar with the bond sector yet, I will say. Yeah, so what about you? I know that you're really into dividends. I'm loving your dividend content. And yeah, tell me about it. How do you get to pick your dividend stocks and your experience with it?
Yeah, so before I go in, I just want to give some feedback on your answer because our answers are slightly different, and I think that comes from the place of privilege that I come from, where I feel more comfortable taking risks. I feel like there is someone, I have a safety net, which is my mom, if I would not go out on the streets. And she's a very, very close to me, so she will always protect me if she's watching. I don't think she's watching this, but if she was, thanks. Um, but I want to point out that you decided to pay down debt at the same time that you're investing. And a lot of people have questions about that. And some people are very, I want to say, religious, where they say, no matter what, you do not invest when you have debt.
Yeah.
But personally, I would, with 8%, I would be trying to pay it down. But what makes you special is you invest in individual stocks, giving you more chances of actually beating that 8%. But I think the most important thing that you're doing is you're creating the habit so early in your life that even if you were to lose by any chance to the 8%, you're still building something that will give you way more returns in the long run. Because people who wait to invest, even if it might make sense mathematically, they're not building the habit and the routine. And when the time finally comes for them to start investing, they don't have their account set up. They're not ready.
Yeah.
So I tell everyone, hey, you may not have a job that pays you well, or you may not have opportunities like that, and you may be living check to check, but because of institutional poverty and not because of you, you still need to learn how to invest and be ready for when the time comes. So
Yeah. And
you
it's
asked me, yeah, go ahead.
sorry, I was gonna say that it's good that you mentioned that because before I mentioned that I started investing with robo advisors, but I had to take my money out because I did not have an emergency fund, and I had an emergency, and that was basically what I had, right? I had about like $2,000 there that I had to take out. So I was just like, this time I'm doing things different. So I have an emergency fund in place. So if there's an emergency, I have that like 4 months of emergency fund that I
Wow.
can use, and I cannot like have to cash out my investments or anything like that. So I am not worried about short term. I know that long term is gonna be great because when I'm not going fully into individual stock picking, because I know my risk tolerance right now. I cannot do that like 100%. And before
Right,
picking anything, if it's a stock, I try to make it a dividend paying stock, right?
right,
So that's important, and making the habit because maybe like what the bank said is just like, okay, your student loans is for 6 years, you have 6 years to pay it. But I'm like, no, I'm not gonna pay it in 6 years, I'm gonna pay it in 2 years, and I have a plan for that. And I already have like everything figured out. Like I sat down and I'm like, this is how I'm gonna pay it. So I am literally hoping that by 2022 I pay that off. But I do not want to miss the opportunity. I do not want to sit down for 2 years and not put my money to work. So I sat down and have a plan, and that's what people do not have. Sometimes people just get anxious or maybe motivated by seeing like people are investing and so on, so I'm gonna go as well. But I do not have any solid basis. I do not have an emergency fund. I still have that. I do not have a plan, and they start picking because they hear in the news like, oh, like Tesla this, or oh, this is happening, right?
right.
So yes, get into the habit, but know your level of risk, your level of comfort.
And when you say emergency fund, are you using that interchangeably with savings, or are those two different cash piles
No,
for you?
those are two different. So emergency funds, and then I have my savings.
What's the difference for the two? What do you use your savings for?
So I am saving towards so education, because I'm planning to take a CFA, and I am
Hmm.
saving towards. I also have a sinking fund for gifts. So when Christmas comes, I don't have to worry about like taking that from like my checking account or
Right.
anything like that. There will be a savings there, and traveling, because I need to go at least once a year to see my family.
Exactly. And I think that's really smart because I even told my friend, why are you panicking in November for Christmas when you could have just started in January? And I said $20 a month. And he's like, oh my gosh, that's so smart. And it's just little tiny reframings of how we view our money. $20 is easy for every month, but then $200 all at once is extremely difficult. So I love that you have all of that. I'm a little bit different when it comes to my budgeting, but I feel like I will go completely off topic because you asked me a really important question, and I'm actually pulling up my portfolio. And what Merrill Edge has, they have a really cool feature called Read Your Portfolio Story, and it shows you your performance compared to the stock market. And by stock market, I mean the S&P 500, which you mentioned earlier. That is a majority of what you invest in. So I'm not showing my money. I'm showing, and the reason I'm not showing my money is because one, it's not a secret. You could always DM me and ask, and I will go through all of my investments with you. Like, it's a lot of fun for me. But the reason I don't show it publicly is because people are at different stages, and what may inspire someone will turn off someone else, and it'll be like, oh my god, a lot, or that's too little, like why would I learn from you? So that's why I don't show money yet. At another point in life I may, but that's my philosophy, and I feel there's already a lot of cool people like Jay Millennial and My Wealth Diary who already talk about their money, and if you want that kind of content you can go there. So I started investing in individual stocks, which is how most people start investing, either through their 401k and all that. But people who want to be active in investing, they go for their individual stocks and they're like, oh my gosh, Tesla, like you said. I'm one of
Yeah.
those people. I'm one of the fools who didn't necessarily think he could beat the market. I didn't until now, but I basically this was my experience. I had some money. It was a couple $1,000s, and I put it into just random individual stocks. And this is what happened. Let's see if I can pull it up. If you can see that. So the purple line, that's the stock market. The blue
Yeah.
line, that's me. I don't know if you can see, but there's a huge gap
Yes.
between the stock market and me. And if I were not picking those individual stocks, if I was just buying the index, saving myself so much work, I wouldn't have to read a single article. I wouldn't have to read anything about any companies, and I would just buy the average of them all. I would be doing a lot better, and at times my money would be tripled. But there's a other side to this coin. Sometimes individual stocks pay off. And I'm going to show
Yeah.
you just recently in the last month, finally, I beat the market by 18% so far in
That's
the,
great.
but that took 5 years. And for a majority of those 5 years, no research index funds was crushing me. So this is where we're at. Let's see if I can make that clearer. It's backwards, but
Yeah.
that says
Yeah.
86% returns, while the S&P 500 is 68.8. So that is quite amazing. But look right here, where the S&P, can you see that, was up 40%, and my investing portfolio was only up 15%. That's a lot of money missed. The rate that I'm going at, the probability of me beating the market investing in individual stocks is extremely low. Most professionals cannot keep a 15-year streak of beating the market. Um,
So
but
there's a question by Tanya, and it says, how do you get over the regret of missing drops in the market? I feel like the fact that I feel bad about missing in March shows that I'm falling into trader versus investing. So there is something really important, and when you're investing, is that some like by reading and all that, is like you do not have to be emotionally attached to your investments that much. And this is something that I have learned, and it has happened to me. Like when, like, let's say I do my research, I buy something, and little I buy it, the next day it drops. Like, you do not have control over that, right? And you cannot be like, oh my God, like my life is ruined. I lost so much money. Because if you are knowing what you're investing in, and you know that long term might got somewhere, then short term does not really matter, like the direction where it's going. So never think that you're missing on an opportunity, I will say. And if you do, then start piling up cash. So when you think that it's the right time for you, you have a plan, then you go for it. What do you think?
Right. Exactly. And for Tanya, how do I get over that regret? I don't get over that regret. I still feel it from March. I feel it hard. There was so many opportunities where one of the companies that I picked, and I talk about it all the time, it was Overstock. I have a post where $600 turned into $11,000, and I was just like, wow, that's incredible. And if I had just invested like basically every dollar invested into it would have been $22. So having 50K invested would have made you a millionaire in 3 months. And that is always like, I was right there. How did I miss it? I was right there. But that's because Wall Street propaganda really works. See, I know better, but I don't feel better. And that's something about it. But I have a strategy for that. Just like you mentioned, Athlete, earlier, I have two investing strategies, and they're both my long-term investing strategies. So, Manny from State Farm, my neighbor, he bought some Overstock a few months ago. Biggest regret not buying more. That's right. They were $2.60 a share, and today they're like $45 a share. Plus, they paid out a dividend, which was just unexpected. But sidetrack here. I have two main investing strategies. Buy every 24th. It's a random date that I pick, but to me, it's not random. And that's also where like I do tie in my emotions and my family history to investing, even though all the data says don't do that. That is dangerous. But to me,
Mm-hmm.
building wealth and money and currency is a spiritual path. I see money as something that can be an extension of yourself, especially in a society that values money so much. It's a way to vote. It's a way to shape the world around you. And I don't mean vote for people. I mean vote for food products, vote for clothes, vote for brands, vote for companies. Um, so that's why it's a spiritual journey to me. But I buy every 24th, no matter what. Market's up, market's down. It's a green day, it's a red day. Nothing really happened. I buy. And my mom yells at me, what are you doing? Stocks are up so high today. It's up 3%. And I'm like, stick to the plan. I stick to the plan. But the other one, to avoid fear of missing out, is I have some money set aside in my emergency fund. And I know you're not supposed to. I know you're not supposed to. But having the privilege of having my mom, who is my ultimate safety net, I have about, without her, I have maybe 4 months saved up as well. And I know I can replenish that within 2 months pretty quickly. So if the market drops, I made a deal with myself that I will take out a month or two's worth and I will invest it, knowing that I have job security, knowing that I have two hustles right now, 9 to 5, and I have a part-time job as well. So if one goes down, the other one's safe. So I always have those, and then I have my mom, of course. And what I do is if the market goes down 30% from the peak, I buy more stocks. And I don't do research. I just buy everything because the whole market is on sale. And that's what I did with the stimulus check, which was money I wasn't expecting to get coming. I took $1,000 and I put it into my Charles Schwab account, which automatically gave me a $100 bonus. So I had $1,100 that I could invest with, and that's where I bought Disney for half off. I bought it for like $79, and I've never seen Disney that low. Like I started investing in 2015. Disney wasn't that low since like 2012 or 2013. So I got the opportunity to time travel to 2013 and start buying Disney stocks back then. That was a radical moment. I also bought What
I
else
want
should
to
I buy?
know something.
Yeah,
When
yeah.
you say, like, okay, the market drops 30%, and you say, I will go buy stock, what will you buy? Well, basically, you will buy stocks that you're familiar with, right? You said you bought Disney, right? Disney is still like a stable company. It's not like a company that just came out like 5 years ago, right? And it's
Yeah,
something that you have been probably not buying, but tracking. So that's important
hmm
as well. Maybe you're not doing like your full research and going
right.
through all the financial statements and all that, but you know it's a well-positioned company. It's not gonna destroy Disney like in a second. So that is really important as
Yeah,
well.
you said it down. Blue chips, that's the answer. And a blue chip stock is a company that has been around for a while. And I forgot the limit, but there's a certain amount of market capital that they should be having, which is a combination of all of their stocks. It has to be higher than a certain number. I think it's either 1 billion or 10 billion, one of those, but they have to have at least that much. And that shows that they can probably survive a lot of things. For example, Disney was around when JFK was assassinated. Disney was around for Vietnam. Disney was around for all the assassinations of the 60s. And Disney survived Ronald Reagan and 9/11. So now we're here. Shout out to Ronald Reagan. And now we're here, So that kind of history never, you don't want to invest based on past performance, but tracking a dividend stock's past performance has some power in it. It's different than a company that doesn't pay out dividends. That's why dividends can be seen as a signal of security. And that's also a reason why when there's changes in dividends, like all the airlines crashed, yes, but for a lot of people, it wasn't because there was a fundamental change. It was because the dividends were gone. So they panicked because what you said earlier, you feel okay investing in dividend stocks. If they drop, you're still getting paid. But a lot of companies, including Disney, stopped paying out dividends during this pandemic right now.
Yeah, also big banks stop paying dividends as well. But I feel like these are different times, right? I don't think the world ever expected to have a something lasting for that long, because yes, there have been pandemics before, and that's why like a lot of technical analysis says like, okay, yes, we can recreate this situation that's having happening right now, but no, you cannot really recreate it. This is a unique moment, I will say. What do you
I
think about it?
I want to say that so there's bull markets and there's bear markets. And a bull market means that stocks are going up, and a bear market means stocks are going down. And usually it means that there's a 20% change in the direction where it's headed. Um, there is another framework of looking at it. When you look back at 130 years, the whole market looks like a bull market. You don't see any world catastrophes really changing anything.
Mm-hmm.
The Great Depression looks like this now. Back then, it was like, wow, our money is, we only have 20% left of our investments. What do we do? If you keep investing, your money would have healed a lot quicker than not investing. And your money was not safer in the bank back then. Ankara. Um, so lost my train of thought for a second, but dividend stocks is that extra security. You know they're going to be paying you out with all of these world catastrophes happening. And the dividend stocks that I buy are the dividend aristocrats. Those are the ones that paid it out for the last 50 years, 40 years, 30 years. And the longer they paid it out is the more that it shows their stability, right? So
Exactly, dividend shows the stability.
yeah, and there's a cool question right there. So if index beats stock picking, correction, indexes um, usually outperform individual stock picking, but it doesn't guarantee that you're going to beat stock pickers. They're called dividend aristocrats. Those stocks that have been paying them out. So if you just Google dividend aristocrats, and if you click the link in my bio on my channel, there's a video about the dividend aristocrats, and the ones that I picked, I actually bought a couple during this pandemic because their prices got cut pretty hard. So I thought it was a cool time to pick some up, and that's when I would deviate from my index of purchases, and I would be buying individual stocks. So that goes to the con points question, where why would you ever buy individual stocks if indexes win in the long run? Well, what if you have a dividend aristocrat that's been out for like 40 years on the market? Some of them have been out for more than 100 years, by the way. And what if their price is cut in half, but the market is only cut in a third? Odds are a dividend aristocrat that has survived so much will eventually even back up and catch up to the market. So you have a lot more upside potential. That is when I would invest in an individual stock.
Yeah, and also it's like the index um follows, well, an index basically is based of different stocks, right? So there are some opportunities out there that might not be included on the S&P, and you can outperform the market that way. But I feel that in order to do that, you really need to do your research. It's not just like randomly picking like any stock that you see out there. So
Mm.
stock picking, you can outperform the index, but they're really like low probabilities, and it really depends on, how are you picking your stocks, your strategy, and all that.
So I am a butthead because I disagree slightly with something, and it's not that what you said isn't true. It's that there are different philosophies to it. When it comes to investing, it's not always black and white, and there is a
Mm-hmm.
lot of gray area. What you said will work for most people for sure. There's some data from large brokerages and firms like Charles Schwab that an algorithm that randomly picks popular stocks has a decent chance of beating professional investors. But for how long? I've been
Exactly.
investing for 5 years, and only the last 2 months I've crushed the market. And really, what matters for investing is the last 2 months, because it's as if I've always been beating the market, and I know better. But if you just judge my portfolio by right now, for every dollar that I would have invested in the S&P, I have an extra 20 cents now. So if I put in 100K into the S&P and 100K into how I'm investing, I would have an extra 20,000. And again, it's just a moment. I would have to not sell anything for all that time. And there were times where I did sell. And by just buying and holding some of these companies, and full disclaimer, some of them is like Disney, and so on like that, um, then I would be losing way harder to the market, and I would have to tolerate having like 60K when I would have had 100K, and knowing that all my friends like Conpoint would have 100K, and I'd be missing out on 40K because I tried to be smarter than her.
Also, it's really important that you know that the stock market is not a reflection of the economy itself, right? I usually work, and I started doing it recently because I started working, well, from home, and I'm usually on the phone. So before I was not on the phone, I was just like emailing people, and I have Yahoo Finance on the background, right? And
Me too.
today I was listening to, there is a lot of market volatility. The market was red right now, and
Hmm.
they were saying like investors are experiencing market anxiety, right? Because
Mm,
you have all this, and I want to know your opinion about that. Since you
okay.
have all these news, especially in the States, because the measures there have not been like 100%, I will say. So cases are going up every day, but the
Yeah.
markets are green, right? So the market is not a reflection of the economy.
No.
The unemployment rate is high, but the stock market is still green. Why is this happening? And one of the explanations is that big institutions are just buying massively the market, which is affecting the market, and it's not reflecting the economy, and
Hmm.
also the money printing, right?
Right.
So the market anxiety comes from there, because but it's really hard So you have all these fundamentals, and I am a fundamental person. I like to look at financial states and all that. But I feel like right now I am experiencing a little bit of market anxiety because I do not know if that holds anymore, right? The valuations of the company are really tricky right now because it looks like everything seems normal in the stock market, but the main market, which is US, is just like not,
They're not,
going
yeah,
the direction that the economy is going. So yeah, what do you think about that? Like companies
yeah.
valuation and market anxiety?
hmm So first, I want to answer that question about small caps, and I want to say that I have one which is Overstock, and they're a little bit under 2 billion, and that one has been a roller coaster, and it was kind of a gamble. I was down 90%, right? So for every dollar, I had 10 cents left. But I just held on to it, and it wasn't my main investment. My main investment is never going to be a small cap company. I will take a gamble every now and then, and if I get like a bonus or something like that, I will put it into these small caps without doing too much research, but it'll be something that I've been watching for months or even years. But I just wanted to answer that real quick. So yes, companies, let me just read these real quick. How often do you sell your long-term positions for
Yeah, I was
profit?
reading that one. How often you sell for long term?
Right, but let me answer your question that goes with Tanya's point, how
Yeah.
the market is different from from the worldwide situation. There was a time, I think it was in the 80s, where the market was not going up. It might have been late 70s, but the economy was booming. It was 80s. The market was not doing anything, but the economy was booming. So when things are going great, and this goes for that question, how do sometimes companies beat expectations and their share price goes down? Well, if something amazing happens, what are the odds that something amazing will happen next? Right? So if a company does terribly, well, there's a lot of upside, really. So it really depends. Is the glass half empty or is it half full? The Disney did horribly. That means they got a lot of upside. Disney did horribly. Oh, I'm going to stay away from it. You never really know which way mass investors are going to go. So you get a lot of like companies beating their expectations and the stock price goes down and vice versa. So it is really a gamble. And that is another way that people day trade, by the way, for day traders in here or people interested in short-term profits. Um, you can definitely track earning dates and put your money in right before the earnings are out. And that's when you get huge fluctuations up to like 10%, 15% in a single day from blue chip companies that usually don't move that much. So that's a way to gamble if you wanted to, or if you were going to invest in them anyways, you could go ahead and do that. I know this year there was a lot of opportunities with that. Target, like I think went up like 8% after their earnings, and a couple other companies. But then again, that could all just go the other way, and you're gonna have to be just like Nathalie here, where she buys something and it just drops the next day, and she's like, "Well, I don't care. I'm buying it for the next 30 years." That's where I'm at. That's how I'm building my wealth. I'm going for dividend paying stocks in certain aspects, but for the most part, it is all index funds. I have a few blue chips. Yeah, Robinhood has fractional shares. I don't shout them out because there's a wait list and some people have to wait quite a while. And I'm like, no, Nathalie just told you guys, don't wait. Even if you have debt, make your accounts. Start doing a little bit, $50 a month. Like, do something. So that's why I don't shout out Robinhood because of the wait list. I don't want people even waiting 1 week to start.
The best time to start is now, right? Don't get too into I need to know everything, or the news are saying this and this is happening. No, just educate yourself. There's so many resources. Don't wait. The If you did not did it yesterday, then do it today. Do it as soon as possible. Just put
Right.
$20 away, put 50, whatever you have is gonna add value in the future. There are many resources out there. I mostly know for the Canadian side because I mostly invest in the Canadian side. But some websites that have helped me is Investopedia is a great place. I will
Yeah.
say also Yahoo Finance. Look, you do not need to know everything. I put Yahoo Finance on the background, and just by listening to all the people that talk for the time that the market's open, you will learn a lot. Like I'm learning new things every single day.
Right.
And start reading the market market news, start reading books about it, and that's the best way to start.
Exactly. And I think you actually already started because you're in this live and you're listening to these conversations. So you're no longer brand new, you're just new. So congratulations on taking that first step. I second Investopedia. I second our YouTube pages. For me, I actually watch your videos, by the way, Nathalie.
I watch yours too.
Good. You better be leaving them comments. But I have a Flash Finance playlist where you can click it and there's like 7 videos and they're like 2 to 3 minutes long and they go through the basics. And there's also a one-on-one investing for beginners class, which is a lot more formal and less like funny little jokes here and there. It's just this is how you invest. You make these accounts. This is how you make them. These are the bonuses that they pay. These are the top 3 investing strategies for long-term investing. You can mix and match them. So there is one like that there, and you can find what works for you. Um, my friend and fam look at me like I'm crazy when I tell them I'm learning a book. Yep, Instagram. Instagram is the new university where it's free. All you need is an account and an internet connection.
I think this was a great discussion, and thank you so much for having me. And for everyone who joined today, thank you for your amazing questions. And yes, follow us, our Instagram pages, YouTube, support us. Any questions that you have, feel free to DM me.